for a former mentor. I was head trader of a private overseas fund for about a year. That folded because the investors needed to take their money and put it elsewhere. So I then thought about setting up my own company and my own training business. So I now trade, I teach, and I coach and mentor. I don't have that many students at a time because it's quite intensive, but they get one-to-one coaching from me. So Forex Trading London essentially is designed to help newbie traders and people who may be a little bit more advanced to actually improve their profitability and become consistently profitable but independently minded, so they've got their own views on the market. Now, I used to live on a Thames sailing barge as a kid, and then I was in the Navy on warships and things. I love sailing, so I've got this affinity with the sea. I like surfing as well. And the sea moves in waves, and so does the market, okay, which is the link. Essentially, when I'm looking at the markets, I'm looking at wave formations a lot, impulsive, corrective, and if you can get into your mind that the market's move in waves, then that can help you, okay, and we'll look at some of that as we go along on some live charts. Okay, so I'm primarily a swing trader, but I occasionally do intraday, but swing trading I prefer because it suits my lifestyle, okay, on higher time frames, sort of 4 hours upwards. I have a trading toolbox. I do keep touch of what's happening in the fundamentals, sort of just a loose feel for what's going on, you know, read the key headlines and that sort of stuff, be aware of news events. I've got a trading plan, and I have individual trade plans for each trade I take. I use robust risk and money management. I do multi-time frame analysis, and I'll explain that in a minute. I use patience, discipline, and timing. Okay, so when I'm trading, I try and be a sniper. So I wait until all things line up. Rather like the previous speaker saying, you wait till all the time frames kind of line up, and then you pull the trigger. I use key supply and demand, and I heard the previous speaker talking about supply and demand. I use fibs, price action, which is key, candlestick, trade common patterns. I trade the 1, 2, 3. Divergence, both regular and hidden, wolf waves, Elliott waves, harmonic price patterns, pivots I use in my trading, overextension, and if you overlap some of the above, okay, you get a higher probability of success. All right, there's rather a lot in that toolbox, but I don't use it all at once. Okay, now every trade I take though has probably got the things in bold at the top there as part of it. So there's maybe a bit of fundamentals background to it. I've planned the trade. I'm using robust risk and money management. I did multi-time frame analysis to find the trade. I'm applying patience and discipline. One, to wait for the market to bring trades to me, and also to wait to the right moment before I pull the trigger. I use key supply and demand levels by looking left on my charts, and then fibs and price action candlesticks. Price action can give you a nice confirmation of a market turn, as can candlesticks. Okay, that's pretty much what I wanted to say about me. Okay, so now I'm going to just get rid of that and bring up some charts. First of all, let's just push that to one side. This is the US dollar index. It's the futures US dollar index on my MT4 platform. If you're going to trade the Forex market, you really should be looking at the US dollar index every day. Okay, see what's happening, because of the US dollar is on the other side of most of the major currency pairs. You know, euro dollar, pound dollar, US dollar, Japanese yen, Aussie dollar, New Zealand dollar, so on and so forth. Okay, so you should be looking at this to say so what, essentially. All right. And now the previous speaker, Gavin, was speaking about Donald Trump tomorrow, his inauguration. So is that going to affect the US dollar? It may well do. Okay, although, you know, or is it priced in already? That's the question. So here's what I do for multi-time frame analysis. This is just a basic chart I get, so this is kind of like a simple layout. I do put other things on my charts, but this is the 50 moving average in green here. The yellow is the 100, and the blue is the 200. On the bottom down here, I've got the 955 slow stochastic oscillator. Okay, and I just use that for divergence. All right. So when I'm looking at a chart, here's the monthly. So this is the daily. Well, let's go to the monthly. Okay. So on a Sunday evening, I will skim through my charts and go do a top-down, bottom-up in terms of time frames. And I'll look at see what's going on. So here I would come to this chart and I'd say, okay, so what? Well, we could draw some trend lines. This. There. We could draw one from here, probably across here. And maybe there's one across here. Or just slightly cut through a body. I don't like trend lines that cut through the body of a candle, but nevertheless, these are on reasonable swing points in the market. So we've got 3 trend lines. Okay, so what? Well, if this trend line breaks, then there's a probability that price will go down to the next one. That's one thought. But more key that I find is supply and demand. Finding levels. So if I was looking at this chart here, I can't go left enough on the monthly. Okay, so it's unknown territory for me up here, unless I went to find the US dollar on another application, which I do sometimes. Now let's just look here. So this is previous resistance with wicks to the top here. Okay, price has broken that and moved up. So if price comes back to here, then that would be probably find support here. Okay, what else can we say? Well, at the moment, there is what looks like some divergence. Price is making higher highs, but the stochastic so far is making lower highs. It's not necessarily, I don't like it when there's 2 cycles in here, you see that? 2 cycles in price inside, but nevertheless that is potentially divergent. We could tighten up inside here and send a wedge, that's a possibility. And then gradually sort of make higher lows, higher highs, but tighter and tighter and tighter until price breaks the downside. That's a thought. So I'm just going to leave those there for the moment. Let's have a look at, if I put fibs on this, from this high here to this low here. Okay, price has come to a halt at 127.2 fib projection right here. That's quite interesting. Normally in a divergence, price will go to the 127, 141 or the 161.8, generally around the 141, 127.2. That'll be the high, and then if price then comes back and breaks this level here, see this point here? Okay, that's the first high, that's the low, second high. If price breaks that and closes below there, then we're probably going down. Okay. So that's really about it, I would say. There's no other fibs I could put on here, really. If this became the swing high, and this was the swing low, you could put a fib. Always put fibs right, from the swing high to swing low. Okay, you could put a fib from there to there. But at the moment, we don't know whether this is the high or not. There's no confirmation of that. This was previous resistance here. Okay, and price has broken through it. So they're finding support here. So we've got to break this little zone here to be going down further. All right, that's based on a monthly view. And that's pretty much it. Okay, so now let's go and have a look at take this one off. Go and have a look at the daily. Let's see what's going on there. Well, the weekly rather. There we go, weekly. So here we are on the weekly. Price broke above that region of that sort of resistance level there. Found some support, nice rejection candle here. See this one here with a nice long wick? Moved up. Now it's come back down and now it's sat there. So it's either going to do 2 things. Go up from here or break this and fall down through here. So when price does that sort of thing, when you break a level, get my toolbox, here we go. So when price breaks, say, this level here, often you'll get price come back to retest it, okay, for a goodbye kiss. That's what I call a goodbye kiss in that little spot there. Here's the rule with supply and demand or resistance and support. So this is resistance across here. There's resistance here, yeah? And then price breaks through it, and then we find support. Come back, test it, we may find support here, and move up. So what happens is when you break a supply or demand level, that it actually flips from one stance to the other. So if it was previously resistance and it gets broken, it then becomes support until it's broken. Then it will become resistance. Yeah. So try and, if you can identify these levels of supply and demand or support and resistance, then you can see if they get broken. If they get broken, then you're expecting a pullback. And so you don't have to go short here. You can wait for price to pull back to test that. And if it gets rejected there, that's the time to go short. Yeah. Or if price breaks through and does that, then that's the time to go long if you've got some confirmation at these spots. All right. Okay, so that's the daily. I'll just get rid of this again, show that way. Anything else we can see on here? Not really. You could maybe put a few little trend lines on here, but in terms of supply and demand, there is nothing here. If price breaks through here, where could price come down to? Then you're talking about this is a possible region. So resistance, and then you had this long wick down, found demand, and then we had a strong move away from it, these two candle bodies here, see them? And a gap up as well. So we know there's demand down in this region here. All right. So that, if you're going short from up here, that could be a good target down to here. Okay. Where else could we have? So that's a level. That could be a level down here. So we have a green candle moving away from a doji here. We could have, it's all a bit messy around here. You could have a level here. Here's a level here. And finally down here. All right. Just there. So those could be potential levels where price could reverse from. When you can identify these levels on your charts, what you tend to find is this. So if we break this level, price comes down, pulls back, maybe comes down to here, pulls back. If it gets rejected again, comes down to here. Yeah, moves up, might break that level, come back. So it's kind of like the market is moving through this sort of hidden grid, and it moves up and down this sort of ladder based on whether price hits supply or demand. So up here, supply, down here, demand. Okay, so that's what you're doing. When you're trading, you should be trading between levels like this. Right? Because if you're a key player in the market, an institution, a big bank or whatever, and you see this level here, all right? That's where you're going to place your order, all right? And let it sit there. Often on charts you can see some clear points of supply and demand. All right, we'll look at one on the euro in a minute, and you can actually place your orders there. And because you've got a demand zone, so here's a demand zone. All right, you can go long, right, with a bit of confirmation, maybe down here, and your stop goes beyond the zone. That's your risk, yeah. And then you're looking to the upside for the next levels for your reward, yeah. Just by looking left, all right. It sounds easy, but it takes a bit of practice. Okay, so there's not much else for it on the daily. So I'm just noting this key level which we took off this is the weekly rather, off the weekly, and we'll look at that. Okay, let's go down to. So we know monthly there might be some divergence. On the weekly, we've got a level we've identified, which has got to be broken for the monthly divergence to work. We've got some nice rejection candles here at the moment. Let's go to the daily. So here we are on the daily. And we've had an attempt, sort of 4 sort of attempts up here to this kind of region up here to go up further, and it's failed. And it's come back down to this level here. So now we can see more detail on these candles here by looking left on the lower time frame. So maybe that level starts there, that demand there starts there. This is the lower side of the level. Price has come into it and got rejected. At the moment it's sat underneath this 50 moving average. All right. So if we're going to go up further, I'd like to see a candle on the daily to be closing above the 50 moving average here. If it fails to do that, then we could come down and retest this and come down further. All right. If we look at the price action here, nice uptrend, high, low, higher high, higher low, higher high, yeah? And then we had stochastic making a high in line with here, and then making a lower high when we price made a higher high. So that's divergence, okay? Regular divergence. It's not perfect because this one went slightly over the 80, but nevertheless, it's giving an indication that price was going to turn up here. Yeah? And then we had a bearish engulfing candle. Look at this one here. When price turned, so you could have gone short here, stops above the top here, and traded it down to this level here. Okay? By which time you'd have taken a profit, moved to break even if you had multiple positions. Okay, so daily divergence, potentially, okay, which looks like it's triggered because previously we said we had a divergence before this first high, before the second high, we were looking for a close below that. This one closed below that on the gap down and then came back to test it, rejected here on this wick, could have gone short here, stops above here, trade it down to the next level. All right. Now most divergences, if they're decent, actually if you put a fib from the low to the high inside the divergence, right, will come down to the 127, 141, that region there to fulfill themselves.
Good.
So it wouldn't surprise me if tomorrow we see the US dollar fall further.
Brilliant.
And over the next week maybe, down to here.
All right,
now if we look left in, say, okay, was this target any good down here? Well, let's look left. Where's the demand? Okay, look at this candle here on the daily.
Yes.
Right here with my cursor. Look at that. Strong rejection wick here, green body, and then strong move away. That tells me there's buyers down here. Okay. Also, we've got the 200 moving average on the daily. Could you see price come down here and the 200 moving average come up here, and you get a confluence taking place there? Got fib 127, price comes down, demand zone. Could be across there like that. When it fills itself, come on. So my charts are slowing down a little bit. Let's try it again. There we go. So that zone's based on that wick length, which is there. So price could come down into here, hit the 200 moving average, which can be dynamic resistance often, particularly daily and 4-hour and weekly. All right. Traders will trade off that, lean against it. All right. So that'd be a great target there. And then maybe it's going to move up from that point. All right. But then you're going to have to look at other time frames again just to make sure you've got the context right and it couldn't go down further. Maybe then it comes back up to here, yeah, and gets rejected and turns down again. So you'd end up with something like this. Okay. So price could do this. Yep. Slice through there, come down to there, maybe do that, and then maybe go down further if there's a weakening in the US dollar. Okay. So people have been buying the rumor, Donald Trump coming into office, and maybe sell the fact. It's a thought. Yeah. Okay, so we've done the monthly, we've done the weekly, we've had a look at the daily. We've got some divergence here in progress, thinking we should eventually come down to here. Let's go and have a look at the 4 hour and see if there's anything else going on.
Do you recognise that?
As well.
So yesterday. Is that still on the web?
No,
It's back.
that's
Okay, should talk, whoops.
that's
Get rid of that.
we're just downstairs.
By the way.
There's two guys.
Okay.
Balcony. Basically, he's just looking out towards the golf course. Yeah.
That's close.
So if you were
Oh. We've seen snow.
if you noticed the daily divergence, then you might have gone down to 4 hour and been studying the
Ever this much.
price action.
Unbelievable.
You saw the rejection here, and then price pulls back. This is an impulsive wave, so I was talking about impulsive corrective waves earlier. So if you count 1, 2, 3, 4, 5, and then we had a 3-wave correction. Normally you get 5 waves followed by 3 waves. When you see that, yeah, normally price will, if we get it's a nice doji there, see that inside here, yeah? Then normally price should continue down in the trend. All right, so that will be the place to go short there. All right, stops above here. Entry either at the bottom of that doji, or once that doji closes, you could take a short there. Okay. Even though the moving averages aren't trending downwards, the trend is to the downside by price action. High, low, lower high, confirmation on candles, looking for a lower low, lower high, lower low, so on forth. All right. Maybe you're going to get a lower high here. It's just, well, almost equal highs actually. It's interesting, but we're getting rejected at this moving average here. and then maybe move down further. Okay, which is kind of like tying up everything that the previous speaker was talking about, different time frames all coming together at the right point. So in terms of timing, that's the place where you draw the trigger. Now you could take an aggressive entry up here, but there's no guarantee that price is actually going to trigger the divergence on the daily, which is this line here required to be broken and close below, and then price pulls back. Then you can get a chance to get your entry there with a bit of confirmation. Okay. So let's go. Is there anything else we could do? We could do this. So we've got our point here. That's the high. All right. We know there's divergence of the daily. This is the low. Impulsive wave down, corrective wave back to this point here. And what we could do is say, okay, get our Andrews pitchfork, which is this tool here. We plot it by selecting the tool, point in space, put it onto this point here, and this point, actually this point here, sorry, got the wrong one. So we've taken the first point here, second point here, and we align it with the third point, which is the pullback for the corrective wave. And then what you do is you target the lower side of the APF and use it to manage a trade. If price continues into the lower half, it's normally bearish. Right? And then price pulls back, moves down again further, pulls back. I'm then looking to see if this price can move down into the lower half again and keep going down and targeting the lower side of the APF. We've got to get through this green barrier again. If it gets rejected here, then you'll probably close out your trade if you're a short from here. If you break through the APF, definitely close your trade out. But it's just a way of managing a channel, really. We're trading a channel here, essentially. Okay, so that's something, a little useful tip for you. Okay, now let's go on the 4 hour. Let's go and have a look at the 1 hour to see if there's anything interesting happening on that. So the 1 hour had the same 3 points. Okay, nothing spectacular there. This black dashed line, by the way, is the 800 super moving average, which I use occasionally. Okay, okay, we've come back on the 1 hour. So if you went short here, or you missed that one, you think, oh, I missed that. You know, okay, don't worry. We don't chase price. We just wait. We know we're in a downtrend on the 1 hour, on the 4 hour. One high, low, lower high, lower low, lower high, lower low. Maybe a lower high here, turning over, equal high here, potentially. Let's go and look at price action here. So let's expand this out. Okay, right, so this is what we're looking at right now. If we look at the 955 stochastic, when price made this high, the stochastic here made a high over the 80 level, pulls back down, makes a low, so we got a little short uptrend here. Come back into supply up here. See how with the red candles, strong red move away from there? So this area to me is where the sellers are lurking. We've gone divergence. The price has made a higher high, but the stochastic has made a lower high at the moment. All right. It's just triggering now. So on that basis, if we get a close below here and a little pullback, go short, stops above here, looking to trade down to this region here in the lower green zone down here. That's what I'll be doing. Okay, so that's just a sort of a quick view of what I do when I'm going through the different time frames. And if you want, so you can get under 15-minute, 5-minute, depending on what you trade. But personally, you know, the 1 hour is normally more than enough for me. Okay, I like the 4 hour candles particularly because most of the noise of the market is inside it already, or the manipulation, if there is any. All right, it's all inside that candle. Okay, so the US dollar index. What's the point of looking at all this? Let's go back to the daily. Tomorrow's the inauguration of the President-elect Donald Trump to be the President of the United States. Is the market going to like it? Is the market not going to like it? Everyone knows he's going to be it already. Are we going to sell the facts, having bought the room with this long trend up on strength in the US dollar? Could we pull back up here? Yes, we could. Could we have a head and shoulders? Left shoulder, head, right shoulder here maybe somewhere, and then move down? Absolutely possibility. Neckline would be something like that maybe. Yeah. Or we could come down further, down to here. Neckline, and then pull back up, and then roll over. That's a possibility as well. So just be aware of that. Okay. And what we're trying to say is, what's the US dollar likely to do? To me, it looks like it might be a bit bearish, and we could end up rolling over a bit further. If that's the case, then the general thrust would be on the majors, say, you know, pound dollar, Aussie dollar, so on and so forth, euro dollar, maybe to go up if the US dollar weakens. Okay. But it's got to break through these kind of zones, and here's demand here as well. If you look at this candle here, it's got to break through that as well, which could potentially be a neckline. Yeah, across here. If the neckline was this, how do you find the target with the head and shoulders? What we do is we'll go from the head down to the neckline, measure that, just by putting a trend line on it, take the ray off, and wherever price breaks out, could be over there, breaks the neckline, then we're targeting down here. Okay, now that's pretty much head and shoulders. Okay, so we think we've got a potential bias on the US dollar index. We could also do this. Could have a little APF in here and see if it conforms to this channel, which we talked about earlier. Oops, come on. Sorry, it's just not picking it up. Just delete it again, try again. So bias remains to the downside until we break out the channel, and then we could be waiting to see if we get a right shoulder, or it just continues straight down on the divergence on the daily. So I've got a slightly bearish view on the US dollar. I could be wrong, but that's what I'm seeing at the moment. So let's now go and look at the euro and do a so what and say what could happen there, shall we? So this is the euro dollar on the monthly. We had price coming down strongly, and then we made a bottom. Price made a triangle, so sort of like a volatility squeeze, and then reversed completely out of that. Another strong impulsive move up. Then we had a bit of uncertainty around this area. This is sort of a period where we're sort of ranging really, but it's a slightly falling range. And it's come down to this point here. So let's have a look at fibs, first of all. So put a fib from the low to the high. All right. And you'll notice that price came down to the fib 50 level. All right, found support there. There it is. All right. Now, one of the things I use is harmonic patterns. So this could potentially be a harmonic pattern forming. If it is, then we'd expect price to come down to this region here for one sort of harmonic pattern, or this region here for another sort of harmonic pattern. Okay. At the moment, we're in a clear downtrend: high, low, lower high, lower low, lower high. Oh, slightly higher high, slightly higher low rather, lower high. Oh, break through it. Okay, downtrend down to here, low, or high. Oh, slightly higher. Oh, slightly lower.
Not many.
Gone down slightly lower here. So what could be going on here? Let's look at supply and demand, and we'll come back to this region here. So we're looking left on our chart. So at this point here, where's the next demand on the monthly? Got to go down. This is where price moved away strongly from. So look, those two green candles, boom, boom. Okay, so, oh, that's interesting. That aligns with the 78.6 fib level, just below parity, 0.99 something. What is it, 0.9930, maybe around that region, 0.9920. That's interesting. So if price came down there, we might get a reaction. We might get some buyers. Where's the next one below that one? Well, that's the lowest point of that demand region there, which is interesting because that's support and that was resistance there. So we could overshoot the 78.6 on the monthly, and then pull back and have a wick coming out of there, definitely. It's a possibility rather. And then the next demand is actually down here. See this 3 candle move out of the triangle? So there, that would be well below the 88.6. So on balance, I think we're probably going to get a reaction around 78.6, probably slice through 88.6. Although there is slight resistance there, you might get a small reaction kind of where price came up to there and got rejected, so which kind of translates across to there. Okay, so those are kind of levels on the monthly what I've got set up now. So what? Okay, trend lines. Let's have a look at that.
I'd love a cup of tea, thanks.
It's a little trend line you could have put across here. I don't know what happened. What did that look like? So, oh, that's interesting. See how price came down and got rejected there? Now it's broken that, came back, tested it, fallen away. That's interesting. There's no other ones really. You could have a resistance trend line because you can have support and resistance trend lines. You could draw that across there maybe. Test there, got rejected. You could have it like that. Probably put it on that one. Broken through this lower one. Okay, supply and demand, anything else to go by? Looking left here, there's a wick down here. The support, which was resistance, so support broke through, resistance broke through, so that could provide a region up there, inside there, where we could get a reaction potentially. Okay, right. We've broken through and closed below the 61.8 fib, so the probability is we're going to go down to the next level, 78.6. Right. And there's not much else I can really say on this, I think. You could mark up that was resistance, got rejected, resistance, broke through, found support, found support, found support, then sliced through it. Now here's the thing with supply and demand or support and resistance. When you find a good level, all right, the more times it's tested, generally the weaker it becomes, not the stronger it becomes, the weaker it becomes. So you think about if this is the demand in here, if this is where the buyers are, price moves away strongly, the orders are here, it gets rejected, comes back down, has another go here. The more times it's tested, the less orders there are, yeah, at these levels. So therefore, the more times it's tested, the more likely it is to break and slice through and then reverse in polarity. Okay, so just remember that. Okay, right. Let's go down to the daily then. Done the monthly. Or weekly rather, sorry. There's nothing on the stochastic either, so let's go to the weekly. Now on the weekly, kind of here's what I was thinking. Oops, get rid of that. This is one I've been following for quite a while. So what we're really saying is you've got to draw a line across there, draw a line across here. Essentially, there's a triangle. Price made a low, high, slightly higher low at these levels here, these demand levels here, see them? Rejected, comes back at the top, rejected. This is dynamic resistance here on this moving average as well. And then found support here, came back up inside. This was that trend line from previous. All right. Touched there, reversed, and fell away. So that was the breakthrough. That was the goodbye kiss on the trend line, and it's fallen away. So the question is, what's going to happen now? Are we going to continue to the downside, or are we going to come back in, and maybe test these regions and then fall away again? Okay, don't know. So we just trade what we see. If we look from here, high, low, lower high, lower low, lower high, lower low, lower high, lower low. So we're in a downtrend at the moment. What's the fundamental view on the euro dollar compared to the US dollar? What's the economy doing in the Eurozone compared to America? America has had an interest rate rise. Yeah, they're not printing money anymore. Yeah, the economy's on the up. Employment's below 5%. In the Eurozone, you've got high unemployment still. They're still doing quantitative easing. They're not talking about reducing the quantitative easing program from 80, whatever it is, million or billion to 60 in May time, Easter time. There's no talk of interest rate rises. Mr. Draghi, the ECB president, the European Central Bank, was talking today about inflation being although it's gone up, it's a misnomer because it's mainly due to energy, all those sorts of things. So in terms of looking on one hand, if you had a scale, a pair of scales, which you weigh things out on, off the left-hand side you've got the Eurozone, on the right-hand side you've got the US economy. The US economy is stronger, all right, and the Eurozone is weaker, so therefore the euro should go down against the US dollar. So that's how I look at fundamentals. All right. So they're not likely to raise interest rates in the Eurozone for quite some time. So my bias is to the downside. All right. Now, triangles are normally continuation patterns. So price will come into it. If it's coming in from a downtrend here, all right, it should then continue the trend below that. If that's the case, then we'll see price, the monthly again, here's the monthly, continue down, maybe down to these regions down here. All right. When is that going to occur? Don't know. That's just, it's like a fundamental and technical bias I have at the moment, all right, looking at this pair. So now let's look at the daily. Okay, daily high, low, lower high, lower low, lower high, lower low, lower high, lower low. Pull back inside here. Looks to me like we could roll over on the daily. Here's a little tool I use, it's called a Fibonacci fan. All right, so if price comes up to here, on the edge of fans here, then it could roll over. Now, what I'm really interested in, let's make this bigger, is where's the supply and where's the demand? So if I look at this chart here on the daily, look at this candle here. See that wick projection of that trend line we had previously? There's a red body here, fell away, price fell away sharply. Yeah, moved down. It's messed around a bit and it's come back up, gradually grinding its way back up again. If price came up into that level there, I'd be a seller. All right. Defined risk would be this distance here. So you could either sell and have a stop above that wick, or you could wait, price to come up here, and then turn with some sort of a divergence, or followed by a price action 1, 2, 3, a lower high, for example, and then see if you get some confirmation. Then you could go short there, down, and then you'll be targeting all those areas that we mentioned before. There's the first level down here. Okay, so that's based on price action in a downtrend. Yeah, there's the supply. Then you could say, okay, where's the first demand? Well, probably you've got some wicks down here, but maybe that's the level there. So you could target that level there, take some profit, be at break even, and then see what happens further after that. Yeah, just some thoughts. Okay, I'm not saying it's going to happen, but that's what, if I'm looking at this tomorrow and price comes up to here, then maybe I'll be interested. At the moment, I'm not interested. Yeah. If price doesn't go up here and price starts to break trend lines, then maybe you might be interested again. Okay, but at the moment, we're in a downtrend until this high gets taken out. Yeah, that's just based on price action. That's all it is. If you look at the moving averages from this point here, 250, 150, there, that's the point there where you have the correct order of moving averages, and we're moving down in a downtrend according to the moving averages. And that point here, you could have shorted. This point here, pull back into moving averages. Okay, and maybe up here
every day
tomorrow or the next day or next week.
Yeah.
Now there's a thing called hidden divergence. Right?
All the time.
So look at price here.
On the graph, you've got the dates.
This is a wick.
See the date?
To the high,
September.
stochastic made a high.
One of these
Price comes down.
measurements.
Price, the stochastic pulls back with price. Price at the moment is still making a lower high.
Yeah.
Stochastic is already making a higher high.
Today,
Or 2 weeks.
you have like
That's hidden divergence. That tells me that there's some pressure here for this to roll over. Okay.
haven't you visited your website? You
Sort of
probably-
thing.
So
Yeah.
this is how I'd find out. So I've gone through this. I think we might get some.
28.
We could get some initial US dollar strength. All right.
So this is
Got that right shoulder to be made first on that head and shoulders potentially if it is one,
last July.
and then maybe some US dollar weakness. US dollar strength could push this down.
Green.
Yeah.
Price. Every day at the end of the day.
And if we break below, then the euro is probably going to continue to go down anyway. That's just my view. All right.
Every day.
Maybe wrong. If this breaks and this doesn't hold,
It's closed.
where's the next level?
It's green. And every day when
on the daily. There it
it's
is.
finished, when
See that wick
price, it goes up and down during the day, and if it closes,
on that body? That's where price fell away from.
it's red.
This is where sellers are.
Down.
So that
Okay.
was a good bit for it then.
Price could break through this, move up to here.
All people are trying to do,
Oh, 200 moving average on the daily. What a great place to lean against.
that's today.
Sellers come in,
We don't know what this line
maybe a few penetrative wicks above, and then price rolls over.
Oh my god, there.
Just a thought. Okay.
What all in
I don't know what's going to happen next. I'm not Mystic Meg. All right. I'm just putting together some potential trade plans in my mind based on what I see. That's it, really, essentially.
Continue to go
Okay.
the same direction. See that? It's a trend.
I'm seeing
Because I read
So-
good bits of that.
chats.
Well, it wouldn't have been very good if you bought there, because in the price.
Just make sure.
So you would have bought
Okay.
something,
That's all fine.
bought
Okay.
a pound, and then it would have been a week.
So let's go down to the 4 hour and see what's going on there.
Good with it.
No.
But if you bought it there for £50,
Come on.
and then you had it for a week, and you sold it there for a pound, you'd be happy. You doubled your money. Yeah.
It's not much really, apart from the fact that I can see that the possibility that we're going to turn here and move up and come up to here. I can see that we've got to see this move down and then pull back and then a slight move down. So let's go and have a look at the 1 hour. Okay, so this is rather like the US dollar index. That's why I look at the US dollar index. Remember the US dollar index is coming down at the moment because of divergence on the 1 hour? Remember that? Okay. Well, we've got divergence here. There we go. Leading price action. Okay, oscillators. All oscillators are lagging. All right. All oscillators are lagging. I only use them for divergence. So we could even do this. We could say, okay, sorry. Bring up the stochastic oscillator. You could take away the blue line. Doesn't mean anything. It's the signal line you want, which is the red one. That's the signal line, and just to have that. Okay. So all oscillators are lagging, but they can be used as leading indicators if. Okay, only if they're compared to price. So here we've got a low, stochastic made a low. Here we've got a high, stochastic's made a high. Here we've got a low, stochastic's made a lower low, yeah, compared to the previous one. Stochastic's made a higher low. That's divergence. That's a leading indication that price may, yeah, if it closes above this level here, close there, test, led against the 200 moving average as well. If it closes above there, then the probability is it's going to go up to these regions up here. All right. Now, isn't that spooky when you go and look at the US dollar index and you go, okay, let's go and look at the 1 hour? Exact reverse. So when you're trading, you need to be aware of correlations. So correlations, so for example, all the majors are correlated to the US dollar. Yeah. So if the US dollar is going sideways, not doing anything, then the currency pairs may still move based on the economic news from their own and the trading of particular countries. So if it's pound dollar, then something may move the pound on UK news, for example. But there's two sides to each currency pair. There's two sides to the coin, two stories to be told, and you need to think about that. All right. Okay. So let's go back to the euro dollar. So we are moving up, and let's make this smaller. Just trying to bring this in here. What I'm looking for is, how far could price go? There's previous supply up here and up here, so there's levels where price could come up to. Yeah. If price breaks through those, then this was my daily supply level, this black line, and that was that green zone here. Then 107.50, that region, 107.16, that colour there, I'd like to be a seller there. Let's go and look at that on the 1 hour to see what it looks like. It's this one here. So that candle here, so it may go a bit higher. It could penetrate up to here. Look at that nice little zone here. Bring that across. And there it is up there. Okay. So if you follow through on doing multi-time frame analysis, what you're actually doing is you're looking at it and you're going, so what you're saying, what's price done in the past, right? And you're looking left, all right? And you're saying, what's price doing now? Yeah. What could price do in the future? And do I want to get involved? And where and when do I want to get involved? So at the moment, you could be trading long here, and I want to get involved maybe trading short from up here. And all I'm doing is I'm trading between levels. So if we take this level here, where price turned here, that's where the buyers came in. Yeah. Price falls back to it, price reacts, goes divergent, price then moves up through here. Then we're going to test here and test these levels. Right. So you may get a reaction here and price rolls over. Could do. You could get a top here. This could be the bottom, the low, and price comes in and maybe goes to here, and that's enough, and then rolls over. Then you've got a high, a low, a lower high, and then again you wait for confirmation, and then you could trade that down. If we break above these levels, then we're going up to here. And then you've got to wait for the reaction there and wait for some confirmation. Okay, so that's kind of how I look at the markets. I'll ask the question, and maybe someone can let me know. If anyone wants to look at a particular currency pair, anyone got any particular one they want to look at, apart from those two I've just looked at? But you're getting the point. The point is, methodically, every Sunday I'll go through the currencies, looking at all the time frames, going what ifs. Now, you haven't got to look at the monthly and the weekly very often. Once a week's sufficient, right? You want to be looking at the weekly candle close, the monthly candle close, where the levels are, looking at the daily closes definitely each day, 4 hour and maybe 1 hour, and that should be sufficient, right? If you're swing trading. Okay, if you're intraday, then you're probably going to be looking at 4 hour, 1 hour, 15 minutes, something like that, or 1 hour, 15, 5 minutes, depending on what suits you. Okay, as a trader.
Okay, Martin, got a request for the pound dollar cable or the Australian dollar versus the US dollar.
Okay. Yeah, let's look at cable. If I can just get rid of this. Okay, so let's just take some of these lines off. We'll quickly whip through this one. There somewhere. So 119.57, I think that's the flash crash low, something like that. It could have gone a bit lower, but that's what I've got marked up on my chart from previous lows to the left here. So demand to the left here starts there. I have a trading friend in Argentina who sent me his chart from another system which had that line set up, and isn't it spooky that price actually came right down to that level and there? But there we go. So let's look at this. Let's put an APF on here. So I put an APF on here, showing this current downtrend. You can see we're right at the mid APF point. So if we're going to move, if it's going to fail to go further down, this is where it's going to fail. All right. It needs to get into the lower half of this APF properly to get some momentum to go down further. But at the moment, we're not doing that. We have come down to that previous level where I got marked up here. So we're finding some support. Some buyers are around at the moment, which is interesting. I don't know what all this lot is. Just clear all this off. Okay. So potentially price, can come all the way down, right down here if it wanted to, yeah, all the way down here. So until we're below the dollar. Is it going to happen? I don't know. All right. That's in terms of price action: high, low, lower low. All right, now we can do this. We could say, okay, interesting. Let's put a fib from here to here. So this is a swing low to a swing high. Normally when you get a move, yeah, the price normally goes to the 127.2, 141, 161.8, where we came down exactly to the 141. That's interesting. All right. So we may have some residual demand down here. Okay. That's the first point. Right, now let's take this off. Take this off. Let's go down time frames. So down to the weekly. We've double bottomed down here pretty much. When price came down here, it went divergent. Okay. So this is the Brexit, and this is the flash crash. And then we came down, we tested that, found back into that demand zone. This is the demand zone I had previously marked out. Okay, inside here, and we got rejected. All right. Interesting, and it's divergent. Maybe we could see, price maybe come up to test these levels up here. That's where support is. It's a possibility. Right? Or price comes down and tests the lower side here. Could do that. Could go divergent again. Don't know. All right? Just saying what I'm seeing. All right. Okay, let's go. And there's not much else really on this. I mean, I suppose you could draw trend lines across here, but at the moment it doesn't really help you much. But it probably goes across like that. A test of it and break away. Not really much else. There is one thing you could do. You could put a fib from here down to here, which is the low, and see where some of the levels are. Maybe, yeah. Fib 50 is this is a supply level here. See that? This is support, which is just below the 38.2. There's not really much I can take from that. Okay, go down to the daily. Okay. So this is the daily. This was this move down recently, and then the Theresa May speech. Let's look at what happened coming into Theresa May's speech. Okay, price went divergent on here. Okay, now this is a classical reversal pattern. It's this one. What happens is you get price comes down, makes a low, then it makes a lower high, then it makes a lower low, it makes a lower high, yeah, and then it makes another lower low. So you have three lows in sequence, and it's divergent either across the last two or across from here to here, yeah. And they tend to get an explosive move out of it, whether it's based on someone talking or whatever, but technically that's what you see. Okay, and then you target. You draw a line from here, across to there. All right, and your entry is on a break above this line here, breaking this low here. So this candle turned, and then some inside here you'd have to try and get a long. Okay. And then the target line, this one here, is hit and satisfied. There's the previous highs, there's supply, look. That's where the red candles came away from. Where did price go to? Up to there. All right. If price finds support here, where could it go? So let's go and look at this. Let's just mark up on the daily. There's a supply level up here, resistance here, around that region. Okay, so price comes down, pulls back, strong move away, comes down here, gets rejected that zone we had marked up, moves back up to there. First test of this, pulls back. Maybe the second test, if it comes back up here, will break through, and then we're heading up to here. All right. Could put on some fibs. Just get the charts back. Oops. Sorry. Come on. That's better. Put some fibs on from here to here. Swing high to swing low. Oops. Don't know what's going on my charts, but there we go. There we go. So swing high to swing low. 78.6 up here. 127 up here, above there. So this region here, that could be a good target if you've got a long signal. Let's go down to the 4 hour and just see what that looks like. Just take this off. Okay. So my students, once they've done all my lessons and they've fledged from my actual instruction in terms of learning different strategies and learn how to do analysis and things, then go into a Skype thread, a private Skype thread. So they were all told about this, okay, the daily divergence on cable, all right, well in advance. So they knew about that. So let's have a look at what's going on here. Now the euro dollar we saw was going up, didn't we? Yeah, just now, and the US dollar index was coming down. So maybe we're going to move up some more here. Now we've got the 200 moving average on the 4 hour in the way here. All right, we've had a strong impulsive move up here. Look, 1, 2, 3, and then I'd expect kind of like a wave 4. This could be the end of wave 4, or the end of wave 4 could be down here somewhere. Okay, and we get a 3-wave correction down here. So there's kind of 2 possibilities in my mind at the moment. Whoops. And that is this. Right, this is where we found support, demand, and we move up further and break through this level here. Okay, or this is wave 1 of a correction, this is wave 2 of a correction, and we come down here to take the stops out of everyone who's gone long down here, yeah, into this region here, and maybe find support there, and then move up. Okay, which will give us a wave 1, wave 2, wave 3, wave 4, then up for wave 5. All right. So there's no, I'm not saying either way is right, or I'm just saying what I'm thinking at the moment. So this is quite a shallow pullback in terms of a correction. All right. So I was thinking might get something a bit deeper, like that. So I'm not doing anything at the moment. If price does come down to here, then I might be interested if it sets something up. Yeah, based on the fact that the daily, all right, is divergent, and we should be going to much higher levels up here. All right. So that's I see it on cable.
Martin, that's fantastic analysis. Thank you for this. We're unfortunately
we're out of time.
Against the clock. I'm sorry.
Okay, no problem at all. All I was going to say was, if anyone's interested in sort of a basic foundation course, they can go to the Learn page on my website, forextradinglondon.com/learn. All right, and you can watch loads of videos there. There's also free downloads. Go to there and sign up, which will get sent material. Sort of every sort of week, you'll get sent a lesson over a period of time, which relates to all the videos. You get PDFs through by email. And if anyone's interested in mentorship, go to the mentorship page. All right, put your details in there on the form, and you'll be sent a program explaining all about this and how we do it, etc. So there's the form at the bottom of the page there. So if anyone's interested in that, then feel free.
Fantastic.
Thank you very much for listening to me. It's been great to be here again. Good to talk to you, Simon.
It's great to have you on board. Thank you, Martin. Great analysis. That was excellent, says Wayne. Fantastic analysis, says James. So great feedback there. Okay. Sorry to rush you at the end there. I'm going to
no problem.
The presentation back. Speak to you soon.
That's fine.
Bye.
Okay, take care. Bye.